Personal loan versus credit card USA. When Americans has need extra money to of the most common options personal loan versus credit card both of the help coverage expenses manage emergency of consolidate between debates but they work in very different ways. Understanding the difference between a personal loans and a credit card is important before making a financial decisions. The right choice depend on your goals, your credit profile, and how you apply plans to prepay the money. A personal loan is usually a fixed amount of money browsed from a bank credit union or online lenders companies like Will Fargo's Cashes and SoFi offer personal loans with fixed interest rate and set repayment term. Once approved, you receive the money in a lump, but sums and refills repay it is equally, and monthly installment cover a specific period offered between 2 or 5 years because the payment are fixed browsers from now us actually how much they honors each month and when the debates will be full paid off credit card in the USA and one of the other hand provide a revolving and lines of credit instead recovering a lump sum few gives and a credit limit you can browse up that limit repay some of or its and can browser against major usually like Americans expensive cities and Bank Americas offer a wide range of credit card with different regards and interest rate. Credit cards are widely accepted across the United States, making investing for everyday purchase, travel, and online shopping. One of the biggest difference between personal loans and credit cards is the interest rate structure. Personal loans are usually come with fixed interest rate. This means your rate stay the same throughout the life of the loan for browsers with good credit. Personal loans rate can be significantly lower than typical credit cards. Rate cards generally have valuables interest rate which can change based on market conditions. That average credit card in interest rate in the United States is now offered higher than most personal loans rates, especially if you care and balance month to month. Another major difference is repayment flexibility. With personal loans, you are required to make fixed payment every month. United States until the balance is paid off. This structure approach can be helpful for people who want to disciplines and a clear payoff timeline. In contract, credit cards allow you to make minimum payment, but carrying a balance can lead to long-term debates due to high interest and financials charge will the flexibility of paying only the minimum and may seem attractive it can significantly increasing the total cost over time personal loans are offered and between the choose largest one times experience and for example if someone needs $1,000 of medical procedures home repairing and repairing Americans use personal loans significant and especially to consult high interest rate credit card balance into a management monthly payment. This is can stifling financings and protections save money for interest. Credit card are more suitable for some smaller ongoing experience some and short term browsing They are also offer regards programs such as a cashback travels point or airlines miles for disciplined users who want to pay offer full balance each month. Credit card can be extremely beneficial. Paying in form avoid interest and charge avoid allow cardholders to take advantage of regained and fraud protections and dispute right that many not only for personal loan you credit score and your payables to describe the interest rate of a browser and with higher credit score generally qualify for lower rate on personal loans and better credit card offer those with lower credit score many face higher interest rate for many need to consider securities credit card to buildings and rebates reversed credit. Another factor of considers and it fees personal loans many individual organizations fees which are rebates for the long and loan interest amount upfront. Some lenders also change late payment fees credit card many have annual fees late payment fees balance transfer fees and cash advantage fees. It is important to read the term carefully before choosing a third option. In the term of in fact on the credit report, both personal credits and card can help building credit insurance. Making one times payment and keeping balance lower and relative to limit are key factors in maintaining a strong credit profiles and debates. However, maximum out credit cards can relative negatively affect your credit utilization ratio, which many lower scores antigens and some suppose choose the bet between personal loans and debates that also credit could be not suitable for before decreasing companies and compare interest rate fees repayment and browser term and how you know ability to repay responsible browser and choose the both personal loans and credit card can be useful financial tools when used wisely but that also they can also lead to debates and problems in wastage.